At this point, everyone's main concern is whether we will be able to retire with Tesla shares. Doubts begin to surface as the stock price drops further and the globe appears to be in disarray. If Tesla is able to turn things around, how many shares at these absurdly low prices do we need? However, do you know what the bright side is? When the price is lower, it is easier to accumulate more shares, which will ultimately increase our value. So let's examine these ambiguities and make use of the most recent graphic. If you already agree, click the like button and get some popcorn. If not, now is the perfect time to subscribe. Let's find out what it takes to have a comfortable and hands-off retirement by 2030. It appears impossible to stop the Tesla stock's seemingly endless decline. But hey, let's pause in the middle of the confusion to enjoy these cheap pricing. Many of us are in it for the long run, aiming for that lovely retirement in 2030, despite the short-term volatility. We need a passive monthly income of $6,000, which works out to $72,000 yearly, in order to retire quite comfortably by 2030. A 5% annual inflation rate is factored into this computation for the years 2022 through 2030, although there are others who would contend that the inflation rate could be lower. Let's proceed cautiously and use this figure. We would need a 7% return on $1 million investment in order to make this income. The key query is by 2030, what will yield a 7% return for us? We don't know how much money Tesla will make in the future, therefore some people might think about holding on to and profiting from it. Conversely, throughout the previous century, the S&P 500 has traditionally averaged an annual return of roughly 10.5%. Nevertheless, since market swings are unpredictable, let's anticipate a 7% return just to be safe. I understand that, given the possibility of larger returns, selling Tesla might not be your first decision. But we must take into account the available data. Tesla has an impressive 15 to 17 years of business history. Regarding durability, however, we have a century's worth of S&P 500 data to fall back on. Thus, these are the qualifications you'll need in order to retire comfortably by 2030. Recall that you should be able to live off of this strategy for at least 40-45 years. There is a long trip ahead of you. Let's now investigate the various situations. In the extreme bear scenario, 10 million automobiles with an average selling price of $40,000 are anticipated to be sold by 2030. Gary Black estimates $48,000, but we're sticking with our more cautious estimate of $40,000. With a $400 billion automotive revenue and a 20% operating margin, this would generate $80 billion in profits. Regarding energy, our projections indicate a revenue of over $28 billion, presuming a 20% compound annual growth rate beginning in 2022 and an operating margin of 20%. Profits of more than $5.5 billion would result from that. Let's not forget about services now. Services will eventually account for a sizable portion of Tesla's earnings, in my opinion. Looking at Q1 2020 profits, we can see that it has been profitably growing. Let's give it an operating margin of 20%. Profits from services would come to around $8 billion from this. In sum, $466 billion in sales, $93 billion in income, and 3.25 billion outstanding shares are what we're looking at. Dilution wouldn't make sense. Therefore, I've inserted a share repurchase to account for the success. Going on to the bear case, a few things have changed. We are examining 50 million automobiles that were sold for an average of $35,000 in sales, with a 25% compound annual growth rate. $60 billion in energy sales is anticipated. At a 20% operating margin, services would bring in almost $8 billion in revenue. We anticipate over $600 billion in revenue, about $124 billion in income, and over $38 in earnings per share overall. Let's now discuss the most likely scenario. We're going to assume here that 20 million cars were sold, albeit I doubt that. However, who knows? Tesla might actually succeed. The average selling price would be $30,000 in energy revenue would increase to $47 billion at a compound annual growth rate of 30%. Estimated service revenue is $77 billion out of a total revenue of around $700 billion. EPS would be close to $46 and net income would be approximately $145 billion. We're looking at 23 million cars sold a year in the bull case with an average selling price of $28,000. At a 35% annual growth rate, energy revenue would reach $62 billion. Service income would reach about $88 billion. As a result, there will be close to $800 billion in total revenue, over $150 billion in net income, and $48 in EPS. At an average selling price of $26,000, we're talking about 25 million vehicles sold in the ultra bull case. Revenue from the energy sector would soar to $80 billion, increasing at a startling 40% each year. The income generated by services would be staggering more than $100 billion. All of this results in revenue that exceeds $800 billion overall, net income of $176 billion, and earnings per share of more than $51. It's absurd. Just keep in mind that they are simply forecasts, nothing more. Please take these with a grain of salt, as they are not facts. Now, buckle up as we examine possible Tesla stock prices in 2030, covering both the optimistic ultra bull scenario and the pessimistic ultra bear situation. The ultra bull scenario is predicated on a PE ratio of 15, whereas the ultra bear case requires a PE ratio of 25. Get ready for some astounding statistics. The stock price might soar to an astounding $718 per share in the ultra bear scenario, giving the company a market capitalization of more than $2.3 trillion. In the base scenario, it projects a market capitalization of more than $3.6 trillion and a stock price of more than $1,100 a share. In a bull market, we might see Tesla shares surpass $1,200 a share and reach a market capitalization of about $3.9 trillion. Lastly, the stock price may rise to about $1,300 per share in the audacious ultra bull scenario, pushing the market capitalization to nearly $4.2 trillion. We are genuinely amazed by these figures, which make us wonder about Tesla's possible future trajectory. Let's now turn our attention to the quantity of Tesla shares needed to become financially independent by 2030. I hope you're ready for the most thrilling phase, where we figure out how many shares at different stock prices are required to hit the $1 million milestone. Remember that the present stock price of about $150 per share serves as the foundation for our study, so any changes could have an impact on the overall worth. Having stated that, let's get started. To reach $1 million by 2030 in the ultra bear scenario, around 1,393 shares or a $210,000 value would be required. Even though $200,000 is a significant amount, especially in a recession, it serves as the starting point for our computations. Going on to the bear scenario 1,048 shares or a value in excess of $157,000 would be adequate. As you can see, compared to the ultra bear example, this requires $50,000 less, which is a huge improvement. First, let's examine the base scenario, which requires 892 shares or a value in dollars greater than $133,000. The bull case requires 774 shares or a monetary value more than $116,000 as we move closer to our target. Ultimately, just 726 shares or a dollar worth of roughly $108,900 would be sufficient to start down the road towards the $1 million milestone in our bold ultra bull scenario. Each of the four scenarios, the ultra bear, base, bull, and ultra bull, has prerequisites and possible results. Achieving success in the ultra bear situation is not impossible if you are dedicated and disciplined, even though the stock price is high and it may appear overwhelming. The base scenario, which calls for a significant but reachable quantity of shares and a monetary value, is a more practical choice. Although it's better than the earlier situations, it's still difficult. Nevertheless, if you're determined and have faith in Tesla's future growth, you can achieve your financial objectives. Let's now focus on the bull scenario, which indicates a much higher stock price forecast. Should the situation come to pass, there could be significant benefits. While still requiring a six-figure expenditure, this situation is significantly better than the ones that came before it. Here, dedication and self-control are still essential to success. In the ultra bull scenario, the stock price rises to an even greater level. This scenario provides a potential 9-fold return on investment by 2030, notwithstanding the associated financial commitment. Though it's not exactly cheap, it's a more practical choice than in the past. It's crucial to remember that not everyone can afford to invest a sizable amount of money, like $116,000 all at once. This is the point at which dollar cost averaging is essential. Smaller, more regular investments over time will help you reduce the dangers brought on by market swings. Many investors view Tesla stock as the best opportunity of our lifetime because it offers such an amazing potential. The six-figure investment required may deter some people given the financial needs. To find out how much you would require at various price points, let's experiment with the current stock price. The initial investment needed is much decreased as the stock price declines. To see the possibilities, it's worthwhile to investigate several scenarios. In conclusion, it is totally feasible to retire comfortably on Tesla shares by 2030. This is not the opinion of a single individual. Even long-term investors, including those who have become pessimistic, recognize Tesla's bright future. The market will turn in Tesla's favor once full self-driving is resolved. Recall that they have faced similar questions in the past and disproved the skeptics. FSD will revolutionize the market by continuing on the same path. This concludes the video. Click like if you found it entertaining. For more fascinating material, make sure to subscribe to Tesla Stock News. Together, let's continue on this trip. I'm grateful.